The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. And it's another exciting day. Of course, we've got a market that not doing a whole lot for us out here right now at 2017 on the S&P cash, up about 5.5 points, 2.3 billion shares. And as we look at what's going on, certainly is kind of a little different than most people would think. And that is going to be, how can I explain it? I think we're probably just going to have to go through a little bit of the show because I don't really have a big thought formed just yet. But, you know, the elections are over. A lot of people were yelling and screaming at the open about what it meant. And 20 times we've had elections and the stock market's gone to the moon. And unfortunately, statistically, it was rather meaningless. You know, if it would have been 400 times, I probably would have thought a lot more. Any kind of rare event, though, statistically, is very tough to correlate to something because it could just be random chance. But the idea that a market has to rally, I think, is dangerous. But it didn't take it didn't take very long at all to go figure out exactly what we were looking at in seeing this market move. Okay. And I don't know. It's I got a lot of mixed feelings, so I'm just trying to put my thoughts in order. It's kind of tough to actually do it in real time sometimes. Today is one of those days. In 1999, Webvan goes public, selling 25 million shares at an initial price of $15. The stock soars to $34, giving a company a peak market capitalization of more than $8.5 billion. It closes at $24.87, but the online grocery delivering service has so far only generated $4.2 million worth of sales, on which it earned a net loss of $111 million. And, of course, within the year, it was bankrupt. And why we don't have quite that much bubble, ridiculously bubble-licious stocks out here, especially the IPOs over the year. We have a lot of stocks that have gone public that have not made money. And it's still worrying anytime someone starts saying that you need to look at clicks and eyeballs. And, of course, the big lie over the last few years is just you have to look at the total addressable market. What, you know, if we've got 7 billion people and just 1/1000th of those people buy this product, then it has to be success. Well, that whole TAM argument is a lie, just like eyeballs, just like everything else was in 2000. But you know, just be careful. You know, we're looking at bubblicious territory, and in fact, today, I'm trying to remember who actually said it. I think it was. I'm not exactly sure now. I think maybe it was David Einhorn that said he was adding Amazon to his short basket today. And I think it was down a few bucks on that. So as we, this is a deaf version of 1999, Def Comedy Jam. You can certainly look at a great deal of these stocks. And it's not that these, you know, to tell you the truth, everybody knew this was a lie in 1999. Everybody knew that it was that dot-com bubble was made up money. They just thought that they would sell before everybody else sold. And that's a difficult thing to do. But in retrospect, everybody knew that they probably should lose all their cash if they invested in these flaky deals. Today, it's much more insidious because there's an element of truth. These companies are not able not to make money, but it is the valuation that is different these days. And that's why these kind of companies are much more insidious. Everybody knew that it was a flaky gambling casino in 2000, and around 1999 and 2000. Today, far too many people believe that it's not that this company can go to zero, but it can go to half or even three-quarters down of what its value is today based on just real valuations of what these companies are worth. And that's probably, to me, that's always tougher. If you know a company is worthless and it's a total sham, it's much easier to figure out that it's worth nothing. If it's worth something, but not what they're asking, there's always the lies. And probably the big lie that I hear right now over the last few months was GoPro is a media company. We're going to be huge in media. Of course, they don't have any real media presence. They're not YouTube. They've got a few tools out there. But to get the kind of valuation you want, sometimes you've got to go heavy on the Bravo Sierra. And if there's one company that really sticks out as betting on the come, it's got to be GoPro. The other companies will probably take longer to figure out whether they're worth any money or not. But still kind of a casino out there. Of course, we had our elections last night, and I pretty much have said for the last few months what my beliefs are, what would change in the change of the Senate. Of course, my favorite statement on politics is from Groucho Marx. Politics is the art of looking for trouble, finding it everywhere, diagnosing it incorrectly, and applying the wrong remedies. And I don't think anything has figuratively changed since then. A lot of people, in fact, I was talking to a few people today, said that, well, you should be happy with the way that the election came out. And to me, I still feel a little dirty. Maybe it's all those horrible ads that have been running forever down here in Florida. But a lot of times there aren't any people that come out of this looking great. Everybody gets stained a little bit. It's kind of like the idea that there's a winner in war when you have 1.5 million dead. Even if you at least come out on the prevailing side, it's hard for me to think that you actually won anything. You lost 1.5 million. It's kind of like getting in a lawsuit. There's nobody, I mean, maybe you win at the end, but most likely if you've gotten sued, you've already lost. You've got to hire an attorney and pay him at least $2,500 to get started. So you're basically just trying to get back to zero. Maybe you're lucky enough to get the attorney's fees back. But I always think probably one of the best movies ever won the Academy Award in 1994, I think, was Unforgiven. And basically it's the story of a few guys that go to kill somebody because some prostitutes weren't happy that the sheriff actually didn't do anything to the guy that cut one of the girls up. So they hire some money and hire some assassins. But I think the whole point of the movie at the very end is that no one came out looking good. The sheriff was sadistic. The prostitutes were vindictive. The town folks were cowards. The gunslingers were phonies. The assassins were that. And at the very end of it, just before he walks out of town, he shoots the sheriff. He says that, I don't deserve this. And, of course, he says deserving's got nothing to do with it. And that's pretty much it. I don't know if a lot of people that won deserved it. I don't know if a lot of people that lost deserve it. I just kind of come out of the theater at the end knowing that probably the best thing is to say that all of these people were far from God's glory. And what can you say? I'm just hoping that we deserve and get more out of these folks in the near future, but I don't think anybody comes out looking good out of any of this stuff the last few days. There's enough tarnish on every single one of these folks that were involved in the political system. And I don't know what else you can say about it, but probably the closest thing is that it's almost a biblical tale, right, or a Shakespearean play in how people think that they've won and how people think that they've lost. When I think probably we've all lost something. Anyway, I was talking to Andy today, just before the show, and we were comparing a little bit of notes out here, and he knew what I was looking for, which was that huge gap down. And in that gap, what we were looking at was the need to get a huge gap down. And I said to him, the only thing that even keeps me going now, and some people, if they were listening a few weeks ago when I told everybody it was time to buy puts, I'm not telling you to do that, but I am telling you that there may be some absolutely wonderful buys in these gold companies if they don't go bankrupt. And even though that they do, it may still be a good bet to buy these things at 10 or 15 cents. If they don't go out of business, maybe you get $4 out of these things on the other side one day. And that is the key to asymmetrical bets. You basically have to bet that if you're going to lose that bet, the loss is very tiny, but if you win, your gain is very massive. And so when I look at this and the what I've called the paper cut market for gold, and I think Andy put that in one of his articles that he actually wrote on Seeking Alpha. That's exactly what we had. That was my fear, and I think when he wrote that, he said I thought that we were probably going to come down, but at this point, at around 1140 or so, I was really hoping that we would have gotten the huge gap down and a huge $50, $100 move down. Maybe we still get it. But the worst thing that we can see out here is gold just continue to drop $20, $30 every few days, every week. Just the drip, drip, drip. These are the kind of markets that seem to never, ever quit. And I still think that there's probably a bet and an asymmetrical bet on some of these gold companies if you think of them as options that never expire. And just a thought out there. I'm not saying buy yet. And it is going to be interesting. But think about asymmetrical bets and how you can make them on gold if this thing does bottom out here. But that's what I'm going to be looking at the next few days, is watching these gold companies, which ones can survive.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
As we come back, again, if you really don't understand asymmetrical bets, basically I'm all about them. That is risking a little bit to make a huge amount. That is anybody that's ever lasted on Wall Street, now that I've been around here since, 98? What is that, 14, 16 years? Is that right? I think that ad is so old. It's got to be 3 years old because it talks about me being 13 years in the market. But it's now 16, right? Getting on 17. Pretty old ad. We probably need to update that. But everybody that I know has been around does a few things. And we've talked about it on TFNN about, you always want to think that you can make $3, and if your stop is $1 or lower, you always want about a 3-to-1 leverage possible win. And, if you're just right 50% of the time, you're going to make some cash. I will extend that to think that you really need to be looking at a few times a year of making 300%, 400%, 500%. We did that here not too long ago. That will take care of the times that you're wrong in the market, and you will be wrong in the market. But just be very aware that there's going to be a few times in your life, especially in the market, where there's going to be an opportunity to make a lot of cash. I think that probably going to be able to make some short-term money on some short squeezes here in the market, not too distant future. But also think that maybe there are some of these stocks, if they do make it through the downside of gold, that are probably going to rocket extremely well, kind of like the stocks in 2009. And if they can make it, that'll be interesting. But you might be buying stocks for a quarter and selling them for $4 or more. I remember I was buying BGO for a quarter and selling it for, I think, $2.50 or $2.75 or something, and it went to $6 for the first round. So there was a lot of money to be made in those when no one wanted anything to do with them. And those are the things that will change your life with real money and not just working for and chasing dollars down the street. What else do we have out here? Oh, I had an email, and of course you can always email me at TFNN at PATH, P-A-T-H, at TFNN.com. But a question about why I pay attention to the news, a lot of discussion about trust your charts, not your heart. And I will say that probably until 2006, 2007, I did that. In fact, I wouldn't listen or turn on the TV or watch CNBC. And I recommend that until you really understand how to trade the market. But much like playing cards, in fact, I learned this from playing cards, was the saying, at least in playing Texas Hold'em, that the great players have moved from the average player when they start playing the other person's hand, not the hand that they have. And, of course, in a kind of a reverse beauty pageant in the stock market where you're trying to actually look and buy the stocks that other people you think will be thinking are attractive and selling them before they think they're non-attractive is all about it. And I was able to kind of come out of being an average or good trader to, I think, a much better trader when I understood how to pay attention to the news and basically be skeptical of all of that. And some people might think that I'm a real buzzkill because I don't like or don't believe some of the things that they want to believe. But probably there's nothing more important than to, as Shakespeare said, be true to yourself. To thine own self be true. Better way of saying it. But we talked about what is going to change in the election, and I think if I've actually popped it up, a few of the solar stocks out here today, even Tesla on, we're up mildly. I think a pretty good indication that maybe this thing has started its next ABC down, and that unfortunately or fortunately, depending on which political party you were in, almost all of these were given huge amounts of cash, and it was rather expected that that cash go back to certain political officials. Well, those political officials are out of power now, so these people that propped up the old folks are probably in the crosshairs. Don't expect for that cash to continue on. Why I've been kind of so pessimistic about the energy companies. And we'll talk about what Peter Thiel had to say about that when we get back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Anyway, Peter Thiel was out talking today, and I think they were asking him a lot of political questions. But he, for somebody out of Silicon Valley who is, and you would think would be very liberal, he's kind of more of a libertarian, and has been on some very conservative radio shows and stuff that you just wouldn't normally think about it. Of course, he's part of the PayPal mafia, as they call it. But the interesting thing he said is, and I've brought this up before, I'm just not as eloquent as some of these guys. Maybe they've got a lot more time. Maybe they hire writers. Anyway, he said probably the biggest problem with politicians is that they just don't know the sun doesn't always shine and the wind doesn't always blow. He's a guy that thinks that maybe there's better alternatives for power, and thought that it was rather ridiculous to throw all this money at a lot of the companies like Tesla and some of these other ones, chasing something that just probably isn't quite there yet. And again, you know, solar cells probably a good alternative once we have a storage medium or a better alternative. Also getting the cost of those things down significantly. That many times you can do more harm by trying to push a technology before it's ready than after. So just some of the things I thought are interesting. On or about the 15th of January this year, I put a special report out to my readers on the Tech Insider and said that basically all 3D stocks had topped for the most part. And I was right on every one of them except Stratasys. This is one that they're keeping up here and distributing. We were short this in that Tech Insider at 130 down to whatever it was, 107 or 108. We had bought puts on it or shorted the equity on it. So made some good money on this last leg down. This thing came back up to 125. And, of course, on earnings got hammered today. These stocks are going to continue to need to go lower. And had a lot of people asking me, can I buy 3D Systems yet? Can I buy this other stuff? And the answer is that you always don't get a V bottom in these markets. And or sectors. Same thing with gold. There's no guarantee that we're going to get a bottom down here that hammers, becomes a bottom, and then instantly returns or goes back up. But that's the risk that we'll take, I imagine, at those lows. Same thing with 3D printer companies, though. And that is they continue to chase and spend money, and it is very tough for these companies to get out. I have posited that this big movement up here in Stratasys is a lot of distribution, and we're probably going to see Stratasys and most of the other 3D companies come back through next year. And at some point, these things are going to get to a low. Everybody's going to get bored out of their skulls. They're going to get and let the reality come back to the companies, and that will be the time to buy. But this thing has been down. It's down through its previous low of October 13th. It's through it with volume. That opens up $95.38. The downside, of course, is that we're going into the end of the year. This has a huge short interest now. When we were shorting it, the short interest was not much. Now it was a whole lot. So we're going to see a lot more action in the stock as the bears and bulls fight it. The problem is going to be as volume decreases into the end of the year, does this thing just come back up? This would be something I'd think about shorting maybe at the first of the year. But look for more distribution in this from the, most of the huge funds that own this one that couldn't own the rest of the companies. Let's see what else. And, of course, 3D Systems continuing to move down. We talked about this one going to the pre-split level of about $27 or $29. We had bought this, I think, around $15 or $17 in the newsletter on the way up and got out of it way too early. We basically got everything that we thought we were going to get in a couple of months, we thought it would take a year. We got it in a couple of months. There's always that Goldilocks thing where it's too cold, it's just right, and it's too hot. Well, this one was way too hot. It went up, and like the proverbial story of the angel with wings with wax on them, the wax melted, and these things have fallen back hard. SSYS. The darling of Wall Street, though, look for this to probably be distributed, and then we're going to see the hard crash on this one. When this one bottoms, I suspect that's when we're going to look at buying those again. So this thing's got a while, I think, still left in it to find some of these other ones. We had kind of a disastrous earnings last night, and that is part of kind of where I'm not sure where this market's going. I was pretty sure we were going to get a test of 2,000 on the S&P. It got down to 2,001 on the cash. We're just kind of meandering around out here without a lot of rhyme and reason. I suspect that we're probably going to see into Friday morning until we get more numbers before this market really starts moving. Again, I don't see a lot of upside to this, the market as a whole. I do see, though, some of these stocks probably having some nice moves as they're going to be highly shorted. And as we get into the end of the year, those stocks will probably run those shorts before going into the close of and into the last week. Normally, you really see like half point or 0.5%, a quarter point percent moves every day after the 15th of December in the market, and it comes back up. Herbalife, of course, is another one of these stocks hugely shorted. I'm not going to be surprised if we see one day when this thing pops $10. It's got 40% short interest. I imagine people that don't know and haven't shorted before will be piling in some of these names. It's certainly got the kind of volume to come back and test the $38.63 low from September 22nd. But any stock that's got 40% short interest, probably even more now, you've got to watch it. These things will be rockets. Again, China news, not any good, and we're seeing it mostly in these gambling stocks. Wynn Resorts looks like it's done its move up, and you can make a case that this is set up for a expansion, and we've got the ABC from new 219 set up. And that would bring you back into an ABC down to 142 on this stock. I would not be surprised to see that probably after the first of the year. And if you go back far enough on this stock, you'll see that 142 level. Where's that at? Pretty much where this thing started breaking out. You had a high at 136 back on May 22nd of 2013, and it came through there. A lot of energy didn't really come into the company, into the stock until later. But you can kind of see where this thing broke through that 136.24 level on May 22nd, 2013. My guess is a general failure here. This thing can meander around sideways for a while. If the news out of China is still weak, look for Wynn Resorts to come back to that 136.24, 140 area. So a lot of stuff moving out here. Other stocks that basically dropped the baby Ruth in the punch bowl is HomeAway. And I haven't had time. I'm going to look at this one here after the show about why they had. I know they moved their numbers down, but really didn't get into why. But I think it's very indicative of what I think is coming in the housing market, and that is that we've pretty much saturated the market. There's probably a problem with the mix of what of the builders have been building, and that is they're building way too expensive of homes. Therefore, they're not getting the kind of volume. They need to be going down market, and I don't think they've gone there close enough. The margins are lower in those less expensive houses, and I suspect that we're going to see next year, if there's going to be more of a housing boom, it's going to be the same amount of dollar amount in houses, but maybe selling $200,000 houses instead of $400,000 houses. Margins, of course, are going to get hurt in that, and I could see a lot of these companies like KBH and Lennar and some of these other ones really get a lot more pressure as they have to go downstream to find customers. Disaster du jour today is Chewy, kind of CMG-like company, but a lot of people say it's kind of the McDonald's of that genre. Not quite Taco Bell, maybe a little bit better. I haven't seen any of them around here. Maybe somebody in the den can call me up and give me the impressions of this company if they've ever been in one. You can always give me a call at 877-927-6648, or you can email me at path@tfnn.com. I just don't know enough about this particular company, since there are none around me that I know of anyway. But down on monstrous volume, this is never a huge volume company, and to get 6 million shares out of it probably tells you everything that you need to know. Of other companies of interest out here, EOG came out, had some interesting news and a nice gap up. And when we look at the gaps in this thing, it basically gapped down, gapped up. You wanted to see, the kind of volume you have today, but you also wanted it to close above $97. This thing was talked up pretty hard on Financial Infotainment this morning, and why I expected the big volume, I also expected that I thought this thing would close over 97 bucks today. So watch this one into the close and whether or not it can hold just the high of October 22nd. Somebody making a wisecrack in the Tiger's Den out here about, I guess, Chewy being a selling salmonella by the way the chart looked. But interesting. FireEye, this may be one of the best companies in the world that can't get a customer. It can't get a customer because they make software that is incredibly good at finding out if you're being hacked. The downside is that none of these CEOs want to tell anybody about it. And a couple of CEOs have already been fried because FireEye has told them that they were being hacked and they didn't do anything. And the idea is that if you've been notified, then you are responsible. A lot of these CEOs don't want to be responsible. And they continue to have the best product in the world that no one will buy. And that is the problem with FireEye. I suspect that it's going to take legal action, maybe in Congress, to make the companies much more responsible for data breaches. Security has always been the last thing that anybody ever wants to spend money on in retail stores, in businesses. I guess the idea that getting robbed is just so far from a lot of people's mind that they don't think about it as much. If you're a casino, you'd be out of business. And if that's who they went after, they probably sell every casino on Wall Street. I mean, in Las Vegas on the Strip. But it's not. They're trying to sell to Target. They're trying to sell to Walmart. Target doesn't like them because, of course, they told Target they were being hacked, and Target did nothing. There's been a few other companies like that, too. And it's just problematic. But good company, good product. I'm waiting for them to turn the corner on it. It may have to be a bill that really starts making companies responsible for the data they keep and making sure that they do more than give lip service to the security of our data. Nu Skin is another one out here. This thing, I haven't checked on its latest issues, but this is probably a company that gives you a great deal of what I think is happening in China. This thing basically fell off a cliff when we found out that maybe the data that they were telling us about their sales and their marketing in China wasn't true. So off 139 down to $66. I hope that wasn't a split, was it? No, I thought that, yeah, I think that was a huge move down for them. And, of course, you've got more volume down here. The truth of these companies, especially if you start seeing any discussion of improprietary action on the people that run it, just remember, you almost always have to use the cockroach theory. These people will never tell you the entire truth up front. It slowly drips out, and I bet I'll look at the news on this thing during the break, but certainly the kind of volume to blow through these previous lows out here on September 16th at $40.06, 1.6 million shares. We got 8 million shares already. What does that open up? The trap door out here to $30.12. We'll be back in a minute.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
That's right. Following the show, we got Tom O'Brien. He'll be going through a few earnings, I imagine, tonight. And kind of be interesting to see how this market's moving, especially in that 3 o'clock hour. We've got a press release, or presser, I guess is what they call them now, from the president. And to me, I am 100% in cash. I don't see any real bias either up or down or sideways. Part of what I'm looking for is at least some clue out here as to whether we're going to see an adversarial relationship between Congress and the president, and or, you know, that can come from either side. But I have a feeling that the first clue that we're going to have is going to come in this press release. And press, what do they call it? But it may move the markets a little bit. I have a feeling that other than that, we're going to be looking at earnings again tonight, start getting into bigger earnings, I think, tomorrow. And as we do that, we're probably going to get the market to start moving again. But right now, don't think that we have a lot to either move this market up and or down. I put in my newsletter one of the best quotes I've ever read from Jesse Livermore's Reminiscence of a Stock Operator, and that is that most traders think that they should make money like it was a hourly wage, that they should go in each day and make some cash. The real money is made by waiting, and that's probably one of the hardest things ever to do in the stock market. It always seems like some stock is moving and you've lost money by not participating. You can't win if you don't play, but you also can't lose. And probably the first rule of stock trading, you probably ought to be sworn to this, is first do no harm. And if you don't have a bias, you're probably not going to have any kind of edge. And I just don't see anything like that right now. A few other stocks out here moving today. We saw win Zuli, another one that is down, and volume's almost there. I imagine it'll be there before the end of the day. This thing's blowing through the May 14th low at $28.75, 9.6 million shares. We got 7.2 so far and are lower. When we look at this thing a little bit farther back, you're going to have to go a ways to go back and find this thing. Or is it? I think, hey, that's it. This thing was an IPO. Got as high as $73.50, but it's out here tapping these lows. And a few of these stocks like this, you may see selling into the end of the year. If you're at your lows, probably a good indication that you might see people tax selling throughout the end of the year. If it's at its highs, awful hard to get people to sell their stocks. They tend to want to keep them into the first couple of days of the year so as to pay taxes next year. If you've got a stock, you're losing money on it, you've got and would have to pay taxes, you get that tax selling, which is sell your losers, take the write-off so you don't have to pay taxes this year. And some of these stocks, probably like Zuli, ZU is the symbol on it, may be a good indication. If you've held it from the IPO, you've gone to heaven, and now you're back down to hell. And I don't know if there's a whole lot more that you can say about it other than that. TXW, this one, a little bit of movement out here, but still weak. Time Warner, I don't think they're going to get the merger through. Anyway, hang on for Tom O'Brien. In the meantime, sell when you can, not when you have to. And we'll see you tomorrow. Same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.